Hello, you are welcome again. I hope you can hear me. Now we are going to our third entry model, liquidity and top-down analysis. I want to study about this particular type of entry model. What you are going to notice in all of the entry models is they are moving together. Okay, from the first entry model, second entry model, up to this third one, everything they work hand in hand with the same principle. Okay, for clarity purpose, that is why this entry model 3 is also very important. Now, what is liquidity? Liquidity, simple definition for understanding, is when price or candlesticks take out a previous high or low with wick. That is what we call liquidity. If you go through my channel, if you go through my YouTube channel, you will see where I was doing that smart money concept, where we talk about price is making downward movement, pull back, and then came down. This up now will not be our inducements, identify with I, all those things. But I don't want to be using those terminology to save us from confusion. So since we are dealing with just price action, so we have price making lower low, price went up, make lower high, then price came down again. Okay, so now when price was making this move, it now went up again, take out the lower high, but during that process of taking it out, it was with a candlestick wick. You see what happened here? This is the first scenario, this is the lower low, the lower high, this point here, the lower high, that is this first candlestick formation. Then what happened when price was coming back to it, retracing back to it, it now gave us another candlestick formation. And this is our evening star candlestick pattern, whereby the middle candlestick took out the previous higher high. Whereby the middle candlestick took out the previous lower high point, and you can see it here. It closed, the candles that did that function closed below it. It made a close. The same thing when you are talking about bullish trend. On all these, when you are talking about bullish trend, then price was making impulsive move, retracement, impulsive move, retracement again. The first time it gave us higher high, second time it gave us higher low. Then probably when price now came and took out the higher low in a bullish trend, what do? We switch to a lower time frame, and but before we switch to a lower time frame, this is how it might be represented on the chart, whereby this first formation of candlestick is the higher low. Then the next formation that happened will then be the next formation that happened now take out the higher low with a candlestick wick, and you can see that this candlestick wick, it took it and closed above it. All right, so for us to know how to apply this strategy, this entry model, let's look at top-down analysis first before we come back to the liquidity entry, because they work hand in hand to have the best results. So the top-down analysis, higher to lower time frame, that is understanding of top-down. That is all about top-down analysis. And we have talked about our type of candlestick formation we use, our time frame we'll be using, talking from the monthly, daily, weekly, daily, 4 hour, 1 hour, 30 minutes, just like that. So how can you look from the monthly or the weekly or the daily? Then you are taking it downward to all of those time frame that I've mentioned. So that is all about top-down analysis. Now, what do? For liquidity, when we want to apply this top-down analysis, for liquidity, as we have mentioned before, when price take out higher time frame, high or low, with candlestick wick, then what do you have to do? You have to switch to lower time frame to have an entry. And that entry, what can you make those entry is when you have our signal. What is our signal we are going to apply with our third analysis is through demand or supply confirmation. I hope you understand. All right. Now, demand or supply confirmation, we can remember that is our number 2 entry model, demand or supply confirmation. So that is the signal we're going to be using with our third analysis when it comes to liquidity. Now, when price tap into the demand or supply formed in the lower time frame from the liquidity zone formed from the higher time frame, what you have to do is, first thing first, if price then give candlestick entry signal such as the engulfing candlestick, morning star or evening star candlestick pattern, and so on and so forth, then entry can be made. Just like we have already know our confirmation entry, how that is in the higher time frame, now maybe in your 4-hour or your weekly time frame, or even daily time frame or monthly time frame. Let's say this is the weekly time frame. Price was selling, making this pullback, then maybe price now came to this lower high point, then it caused liquidity there, whereby the candlestick that took the previous higher high is now with a wick. Okay, then we can now switch to a lower time frame, and by the time you switch to lower time frame, you will see price is trying to make upward movement. But when we see this type of situation where price has given us at the top our morning star candlestick pattern, our evening star candlestick pattern, or a valid the supply zone there, since we are selling, so we'll be looking at supply zone. When we have a valid supply zone there, what we want price to do is price to come back, tap into that supply zone. Then we are not going to enter it directly first. We'll now wait for another supply zone to be formed, okay, such as our evening star candlestick pattern, or bearish engulfing, or inside bar first breakout, those things. So when that has now formed, when price tap into the first supply zone, then this candlestick formation are formed. It is that second candlestick formation that I mark green. That is the one we are going to use to now make our entry and trade accordingly. Okay, now this is pictorial representation of it. Price is making downward movement, upward, downward, and then all these are in the higher time frame. The higher time frame that you can choose. Then when price was going back up, it now took the previous higher the previous lower high, because price is selling. It took the previous lower high and he gave us a candlestick close below in the selling market, and this is with wick. After price has done this, what do we have to do? We have to come to the lower time frame of that particular time frame. If you are using weekly, if this type of structure happen on the weekly time frame, what do? We come to the 4-hour time frame. So probably when we come to the 4-hour time frame, we see this type of structure where price is trying to buy, but at the same time price has provided us a supply zone there in the lower time frame, giving us this type of candlestick formation. We are not going to set directly that okay, this candlestick formation is correct. We want to say no. We will now wait for price to retrace back into that supply zone, and when price retrace back, it can give us our evening star candlestick pattern as part of our signal. Then it is this second entry, that is why I make it green. It is this second candlestick formation we are now going to enter to have a solid trade and target our confirmed risk to reward ratio. I hope you understand it. It's very simple. Now let's look at how it is applicable on the real chart. Okay, looking at our synthetic indices, let's look at this chart. Price was making all a bullish, bearish move, pullback, different pullback. Price was just making all this movement. Then price came, took out. This is our major structure. This is our major pullback. You know that, right? All these are just internal pullback, minor pullback, as we have studied in our previous lesson. All these are just minor pullbacks. Okay, so this was where the major pullback now happened. That will now be our higher high. Then when price has now gone to take out the major higher high, this point will now be confirmed as our higher low. But all those things, they don't matter much what's important is what did the price do to this higher high. When price now came back to it, retraced back to it, you can see from the right hand side, price gave us our what? You swept it with candlestick wick. Let me zoom in. You can see what price did. Price did first candlestick wick sweeping. We can go to lower time frame for see entry, but I'll check it, there's no entry there. Then price make another sweep, thereby after the third sweep giving us our what? This is our evening star candlestick pattern. And what do we do? In this particular example, I'm using the 1 hour time frame to show you. Then the corresponding lower time frame for 1 hour is what? Is the 15 minutes. So let me now go to the 15 minutes time frame. Then, like we said, I've already marked out that the 1 hour, which is the higher time frame, zone. Okay, so marking out the zone, what the price do? Price came, tap into the zone of the 1 hour time frame. Not just only the zone, but there's a valid order block here. You can see it from the left hand side. Okay, so see what price did. Price came, tap into this valid order block. When price tap into it, that's inside the zone of the higher time frame. Then when price tap into it, price now gave us another evening star candlestick pattern. You can see it. This is another one. The first candle that touched it, tap into the order block. Tap into the supply zone of the higher time frame and tap into the little supply that we have there. This particular one, you can see it. Then price can. So with this, we can see that this has now given us another confirmation that this particular trade we can take it. And you see, when I took it, it gave a perfect 1 to 3 risk to reward. Just make an entry there, and then the price just came down and gave us 1 to 3. Now this is another example. Volatility 10 IS, the same on the 1 hour time frame as our higher time frame. Then we are going to look at the 15 minutes time frame as our lower time frame. So let's look at what price did here. Price was making downward movement. Then the first pullback, this is our what? Our higher high. So price came back, took out the higher high with candlestick wick. Okay, you can see it with candlestick wick. After price has done that with candlestick wick, we can now switch to the corresponding lower time frame, which is 15 minutes, and see what price will do there. So see what price did. This was the lower time frame zone, giving us a valid supply zone there. See what price did. Price tap into the supply zone. After price tap into it, now it now gave us our what? Our evening star candlestick pattern. It is the evening star candlestick pattern now we now use to make our what? To make our entry. That is the first signal. You can even see second signal also give us another evening star candlestick pattern. We can also use this to make another entry. So, and this also gave us a what? A beautiful 1 to 3 risk to reward ratio. There are a lot of examples with respect to top-down analysis with liquidity. Okay, that is how it is. Have a great time.